Business news now with 680's one, the only irreplaceable Richard Southern. How's that for an intro on a miserable Friday,
I'll
Richard?
take that. It's always nice, too, when you join us on the Biz Report. I find we have a lot of fun, Cynthia.
There you go. Well, let's enjoy this next conversation. We'll start with something that most people aren't going to enjoy. Royal and TD Banks have increased mortgage rates, and this hike is a massive deal because it could eliminate a lot of buyers from a market that's already inflated.
Yeah, that's true because, new mortgage rules went into effect. So here's what happened, Cynthia. Royal Bank and TD Bank announced that they're hiking their 5-year fixed mortgage rates to 5.14%. This is a 15 basis point increase. Scotiabank says they're thinking about hiking as well. It's likely all the banks will follow suit. The move comes amid rising bond yields in the bond market, amid a strengthening Canadian economy, and ahead of what will probably be a Bank of Canada interest rate hike next week. It's significant because new government regulations force Canadians now to prove that they can afford higher interest rates than the ones posted. So this, as you say, could eliminate some people from the market. And Cynthia, next week with the Bank of Canada probably hiking rates, that'll push the prime rate higher, which means those with variable rate mortgages will also be paying more.
Now, should they be scrambling? That's always the ultimate question at this point in time.
I don't know about scrambling, but I think the days of ultra-low mortgage rates and interest rates are behind us. So it's going to be interesting to see what this does to the housing market as we progress towards the big spring season. Of course, we've seen, 7 straight months of declines in the Toronto housing market, Sid.
Might turn it around or not, right?
Yeah.
All right, Richard. So another massive surge for the Dow Jones average. And what's really interesting is investors seem to be shrugging off any worries about Donald Trump.
Yeah, big turmoil in the White House, right, Sid? But investors, they don't care about that. The Dow jumped another 220-plus points today. We've seen a 400-point move in 2 days, an 800-point move in the past week. These are not normal type of moves. It's gone parabolic. And, investors latching on to the tax cut, to the improving U.S. economy, brushing aside Trump's threats of nuclear war, the tell-all book, the derogatory comments towards African nations. Why do traders not care about the Trump situation? We asked David Baskin, Baskin Wealth Management.
If you can sort of filter out the craziness, and that's a lot of filtering, the most pro-business president, if not in history, certainly in recent decades. And if he were no longer to be president and Mike Pence were to be the president, Mike Pence is, at least on economic issues, as conservative as Donald Trump. So from the point of view of regulatory things, tax things, and business having a free hand, these are the days that corporate executives in the United States dream of.
So there you go, Sid. Pro-business as far as the investors are concerned when it comes to Mr. Trump.
And speaking of that tell-all book, Fire and Fury, about Donald Trump, it's #1, but it seems many are buying the wrong book by accident, and it's making a Toronto author a lot of money.
Yeah, this is a funny story. So there's another book called Fire and Fury. You see it on the left-hand side. It's by Randall Hansen, a professor at the University of Toronto. It's about the Allied bombing of Germany in the 1940s. So it couldn't be a different subject if it tried, a vastly different subject, Cynthia. Many new readers, it seems, may have purchased the book intentionally while searching for Michael Wolff's book, although some reviews on Amazon indicate that this may have been purchased by accident, with people pointing out, hey, this Fire and Fury book has nothing to do with Trump. So a bit of a funny one there. But, of course, the Michael Wolff book, #1 on the New York Times bestseller list.
Scathing book, all right. Now, this is really fascinating and deals with a famous band of Canada. The remaining members of the Tragically Hip are marijuana millionaires.
Many times over. So, a while back, a couple of years ago, the HIP took a 5.4% stake in New Strike Resources, a marijuana company. In fact, the ticker for New Strike on Bay Street is HIP. And, of course, marijuana stocks have really surged. And as a result, the HIP's stake in this company is now worth $39 million in.
Wow.
And they're supporting a bit of a takeover effort that the company's trying to do as well. Having said that, we've seen marijuana stocks sell off over the past couple of days. New Strike was down 9.4% today, but still, the band has done extremely well with their investment, as many Canadians have, in pot stocks.
I would say so. Now, here's a little factoid for you just before we get into the last story. KFC, it was my first job when I was 14 years old.
Get out of here. Cynthia Mulligan was selling KFC?
I worked at a KFC. Well, now that KFC is accepting Bitcoin in exchange for a bucket of chicken. I didn't see that one coming.
No, it's crazy. Maybe the latest sign of a big bubble in Bitcoin. So they're advertising the Bitcoin bucket. There's a webpage which we're looking at, Cynthia. They're tracking the real-time price of Bitcoin. So you pay the equivalent of 20 Canadian dollars. Once you send your Bitcoin, they send you the bucket to your front door. Of course, this is a very risky investment, depending on where you think the price is going to go. Back in 2010, 2 pizzas were sold for 10,000 Bitcoin, only about $15 at the time. Today, that would be worth $100 million. So you have to be careful when you're spending your Bitcoin because you don't know where the price is going to go.
All right. Well, on that note, thanks very much and have yourself an amazing weekend.
Thanks for a finger-licking good business report, Cynthia.
Well done.